So, Bryan, we've obviously been talking about technology and some of the components that Nick mentioned, like, bringing in technology and driving around our own little virtual computers. But
Yeah.
can you dive into a little bit more of what is the underlying technology that's driving these innovations for us?
Yeah. So it's showing up in a number of different places, and Nick talked about a few of them. But if you think about all of the computing and sensing tools that are out there, I've been focusing in on the car space lately because I'm a car nut, but also because it's really tangible and there's a lot of things happening there. So it's an easy one to kind of envision what's happening. If you look at kind of the 1.0 version of telematics and you plug in a dongle, you run an app, that's fine. It can tell you a little bit about, how fast is a car going? Did it accelerate really fast? Did it decelerate really fast? Hard braking? And how many miles did it drive? That's all useful. And it's more than we knew about a risk before. But when you look at the 2.0 or maybe it's even 3.0 world of connected cars, you now suddenly add something really critical, and that's context. And I think what Nick is talking about is adding context to our understanding of exposure. When we underwrite, we're looking at past history and trying to size up, given the profile of who we're looking at or what we're looking at or the business we're looking at, how does that match with our past experience, which has served us pretty well over the years. What if we didn't have to do that and we could actually see the exposure and what it's actually doing always in real time? And there's pricing we could do with that in real time. And in some cases, there's regulatory constraints, or maybe today there are. So we can't keep changing the price, but we can change our understanding of that risk always. And we could at least make different decisions on renewal or at the point of handling a claim, or maybe interceding and getting in front of a claim before it happens because we knew what was coming. And so we could predict and step in and say, hey, this is where this behavior is heading. What if you did this instead? You'd lower your risk. So it just changes the nature of engagement from one that is based on predictions made off past behaviors. And then you file a rate change, eventually it gets approved. And so you're always sort of playing catch up with changes in your exposure that you can't keep pace with because of that. And that's kind of Nick's point, that your book sort of erodes from underneath you. Moving from that to a world where by embracing this data, we can actually bring full transparency to what the true exposure is. And you think about for the insured, they always feel like they're overcharged for their insurance. What if they could have that same transparency? And so it wasn't this sort of like adversarial nature on the price and, you're cheating me and we're undercharging you and we think we should charge you more. No, I'm paying all this money and getting nothing for it. What if we all understood the basis of it because we could see everything in real time? I think that's really transformational. And it could be very disruptive, and it could be this destructive moment for some carriers. The reason why I like to talk about this stuff, and I think 2030 is even a little too early for it really hitting us, but today is the date when we actually have to start planting the seeds and making changes. So whether it's 2030, 2035, or 2050 for some of this stuff, really doesn't matter. This is the time actually where we start to make the changes in our capabilities, and more than anything, our mindset and how we look at exposure and these tools and data. And that's where I think we need a wake up as an industry. I think there's been some great conversations, and it's at the point where we should start to take action. And the cool thing is those actions are actually really low cost. And I don't mean the actual cost of doing them. I mean, the chance that you do some of this stuff and it ends up being worthless or doesn't benefit you, it's sort of only upside. So there's a number of things we can do to prepare for these potentialities. And no matter what, they're sort of becoming table stakes and good decisions for us strategically and operationally anyway. So it's sort of a win-win. We might as well engage in this change because I think it's creating a lot of good opportunities for us. So it doesn't have to be this doomsday feeling. It can actually be exciting, but it takes embracing it.